morning, everybody. Welcome to Non-Farm Payroll Day, State of the Market at Option Pit. We do this every morning at 10 a.m. This is free. This is the information you wish CNBC was going to give you. Why? Looking at how to trade, what to trade, things to trade, how we look at the market, actually looking for something actionable, learning something, all that kind of stuff. I'm Andrew Giovinazzi, Director of Education at OptionPit.com. Been trading options for 35 years. Live on my rock in Maine, and welcome to State of the Market. So it is Friday, September 5th. However, the most important thing, besides Lisa's small account challenge, I'm waiting for the other trade. She's probably going to just hit me with a stick when I see her. Stop bugging me. Anyway. Okay, on Monday, we have the Ticker Highlight Show. Okay, again, Leisha Pick here. Leisha Pick. Just letting you know, okay, not everybody is good with charts, but Leisha is. So Walmart, Ticker Highlight Show. We put out the trades during the week. Our trade ideas, we got four of us, Mark, myself, Leisha, Hans. Our long pick and a short pick. We all have our different take on what we like to look at. I like to look at volatility and news. And here we had a pick for Walmart. So Ticker Highlight Show. So we lay out the trades all through the week. Those go to your inbox if you opt in. And then Mark, Judge, Jury, Executioner, although we kind of look at the charts with Leisha first. He picks what he likes the best from the four of us. So this week we had Walmart as a call. Another thing Leisha does, she looks for options. Small options become big options faster. Just remember that, okay? Relative pricing, very important. So, again, got into some calls down here in Walmart on Monday. And then Mark closed, over here, I believe. Again, remember that we just give the picks. We don't alert anything after the initial idea. You're on your own. If you want alerts. If you want how to trade in a service, go just to Option Pit and sign up for one of our services. Leisha's doing the small account challenge, but I believe it is now closed. So you're going to have to look at some of the other product. Leisha has Option Shopper, things like that that you could look at. But for right now, Ticker Highlight Show is free. Come in, and I believe we're on a bit of a hot streak with it. Like the Ticker Highlight portfolio is doing pretty well here. Like we're doing well, extremely well. We've had a lot of good picks lately. So anyway, all those things are posted there on for everybody to go take a look at. All right. So what I want to do now, besides, there you go, 130%, 7% in 2 days. Not terrible. Let me get us back here. Not too bad at all. And what's going on now? Mattman says, my only mistake is I should have let flyers run yesterday. Well, I got stopped. I had stopped out in weekly profit cycles calls as well, Mattman. So, you run your thing, you do your trade. Making up for J&J. So this is classic. You got one trade out of 20, and that's the only thing people look at. You got one trade out of 20. Sorry, two trades. Two trades out of 20. Unbelievable. Can't make anybody happy. So, who is trying to make everybody happy? Fed rate probabilities. So today we're now 97%. So if you recall, at the beginning of the year, what has Donald Trump been trying to get interest rates to do? Take a wild guess. Does he want them higher or does he want them lower? He wants them to drop. Now, creating whatever the storm was, okay, you can agree, disagree, whatever. But anyway, we had a tariff storm. It added some uncertainty to the picture. Hiring slows down. Although I put out a note in my F market. It's a newsletter that I put out every day, basically setting up my trade for the next day. Trade idea. That's available as well. Free. It's free. But again, there's a couple things happening right now, right? The housing market is starting to slow down. Job market is starting to slow down. Those are both not inflationary currently. Now, there's other stuff that is more expensive. Healthcare. I don't think healthcare ever goes down. But for the most part, you got less jobs. You got house prices coming down. You get some chaos. It sows a little, uncertainty, and then there's less hiring. And now we're targeting, the market is predicting, 97%. These are pretty good, the predictions, by the way. A cut down to 425. We'll see how the bond market responds to that. But as of today, TLT is up. What's funny is TLT is up and gold is up. I think gold just set another record today, if I'm not mistaken. And I also have to look at silver as well. Let's take a look here really fast. So we've got TLT. All right. Let's see. Got a little chart here of it. It hasn't really done much here in a long time. But TLT definitely up. So bond prices up, yields down, but gold. Gold, I believe, did we set yep, we're at a new record for gold. By a long shot, almost outperforming the S&P 500, which is not, again, I don't view that as a positive. I view that as too much federal spending, inflation's run amok, all that kind of stuff. I don't think it's very healthy. Don't forget also VIX was below 15. Now it's starting to drift back up, and the market sell-off is starting to go away. So what does that give us? Now, the reality is I think interest rates coming down are good, but the reasons that interest rates are coming down is because economic activity is slowing down, which generally should not be good for the market. However, the narrative has been, right? Whoopsie, wrong one. The narrative has been that we need this. But stocks are at an all-time high. So there is a lot of cross currents here that are going on. Yeah, if you're long some calls and SPY and QQQ that you own today, you had your rally, you got your news. Do you think we're going to keep rallying on the news that everybody's expecting rates to go down? It's probably a good idea to get rid of a couple longs if you got them. Speaking of, let's see here. I don't think our sell-off in volatility is going to last too much. Our sell-off in VIX is going to last too much either longer today. All right. So what it does is this is what the market's got. Now what I want to do is show you this is the only thing that is moving the market lately, by the way. All right, let's take a look. This is my Leisha does nicer charts than me, by the way. So she's option shopper on Tuesdays. Right. I'm kind of, I have a hard time with filling the charts out. But I want you to notice right here on the left side, Powell in Jackson Hole. I could cut. Huge rally. All right, huge rally. If you don't think interest rates matter to the market still, you're wrong. Huge rally. Here, what happened at Friday after the close here going into that? Oh, we close at a high, and then all of a sudden, no tariffs. No tariffs means no income coming into the Treasury. Judge halts it over the weekend, 3-day weekend. Smack daddy down. Boom. Still, everybody's a little grumpy. Now, we did recover a little bit on the end of the day. Maybe, again, because everybody realized you got the tariff thing is one idea, because the tariffs still matter to a degree, because now the government's expecting that revenue. But really what matters is the payroll numbers next. If they're soft enough, we should get a rally, because then the market's going to get their cut. So when you look at it, all right, okay, we got it. Now we had a little bit of again, this was Wednesday after the number. Then we rallied into the close hard, very hard. And then Thursday it was off to the races on the number. And then we have today, we hit a new high, new all-time high. So again, this is the story. What I also want you to notice is how brutal the moves are. Okay, how brutal the moves are. They're sharp. So you have a bit of a disconnect here on how this is working, meaning either market drops, but we haven't talked about volatility at all. So we have market dropping on rate cut hopes, or on rate cut non-hopes, or inflation, and then we have a rate cut market rallies. So at least for the short term, is AI is still pushing, I would say, the boat higher. For the most part, it is floating the boat continually still. So look at big tech, look at Microsoft, look at Google lately. Google was another pick, I believe, last week in the ticker highlight show. I closed that one a little early. Mark held on to his call through that. Then we had that the judge ruled that because of AI, it does not appear that they have a monopoly anymore in search. Google rallied huge on that, still going up. I think it traded 235 today. So AI is similar, floating the boat up. And what I would say is this is very similar, not unlike what was happening in, let's say, 98, 97, when we had the internet boom. The internet boom was lifting all boats. But also in the meantime, we had a sovereign debt issue, right? The Russians stopped paying interest on bonds, or they just said, we're not going to pay them back anymore. They just said, we give up. And it left all kinds of uncertainty. And I think the market was probably down 20%, 25% from the top before it rallied in the end of 98, 99, and then into the beginning of 2000. So you can have short-term sell-offs that are very sharp, even in the midst of strong bull markets because of technology. Now, what does that leave us, though, going into the next couple of weeks? So at this point, as you can see from the chart, my very technical chart I just put up there, the expectations matter much more than what's actually happening. When we're constantly looking for a rate cut, anything that deviates from that narrative is going to push stocks down in the short term. And what you notice, if I go back to the chart, pretty solid sell-offs. Okay, pretty solid sell-offs. When we think rates are getting cut, moonshots up. Okay, now, right now, because I showed you the one chart, you got what, 94%, 95%, something like that, thinking the Fed is going to cut. The probability is very high. So the market is expecting rate cuts. That is the narrative. So anything that deviates from the narrative is going to hurt stocks. And that's going to continue until when? When is the next magical date for all of this? Right? It's going to happen on the 17th. So right now we're moving into, we have an event coming, and we're going to have, I think, a little bit of chop, a little bit of up, a little bit of down. However, once the 17th happens, is it possible that Powell says, I'm not going to cut? Yes. So trading through that, we once again the Fed is setting us up once again for a binary event. If he cuts, I think we'll get a short-term relief rally similar to what we got today. And that will tank volatility in the short term. And then we're on to, basically into the fourth quarter. If they don't cut, I think we're going to see a 3 to 4% down move at least, because there's so much built up in this that 6,400, 6,300 certainly in the cards. Now, in the meantime, the market has to wait for news. Nothing's happening. So the volatility you see this week is probably, like the VIX, is the vol you're going to see for the next 2 weeks. We might get a little bit of up and down, but we shouldn't get a whole lot going on. So if I show you something, how is the market, primed for this, right? And VIX is already up on the day, market down a little bit, right? Because now the reality of it is, for some of you in Rip Zone, hopefully you got to sell some of your VXX puts this morning. I try to put that note out there right on the open. But what you've got is, how does the market plan for it, right? And how we're going to trade it. And again, how I'm trading is how I would trade weekly profit cycles. So there's going to be a special on it for the weekend if you're interested. But how I trade that product is how I'm going to trade for the next week, essentially setting up for market going down or vol going down. And how the market, and you say, Andrew, why can the market just sit and do nothing? Because all of the volatility futures for VIX, they're already priced at a higher number. The October future is already at a 19. This future, the September, is going to expire on VIX expiration. I think VIX is up $1 from the bottom today. So the short answer is the market is already prepared for volatility to go sideways in the short term. That's why the futures are higher. That's how the market prices things. Now, you can see already we just were trading what? 650. I think the high today was 652. We set a new high in SPY. Gold made a new high, and then all of a sudden SPY starts selling off. So the inflation picture is still very real. The sensitivity to interest rates are still very real. So for us here, trading it in the meantime, that's what I do at Weekly Profit Cycles. Right? We trade volatility and we trade SPY. We don't trade it like everybody else. It's not just a one and done thing for a couple of weeks. It's a swing trade, usually 2 to 3 weeks. But in the meantime, any sell off in SPY we can take advantage of. Any little drop in VIX we can take advantage of. So it's not just trading. I got to be right on direction 100% of the time. You can be a little right on the downside for SPY, or you could take VIX. There's different ways to trade markets and events instead of just having an all or nothing opinion whether we're going to fly or we're going to sell off. Because if you run into that in an event, you're either 100% right or you're 100% wrong. And even today, looking at the action, this is a classic on what's going on. Right? You had a classic opportunity early in the morning. Let's go to our 5-day chart. Right? We set a new all-time high, and then after that, boom, everybody sell the news. Even all the vol products are basically back to where they started, even lower than where they were the other day. So again, trading this event is a little different. So this weekend, I'm putting out a special for Weekly Profit Cycles. If you want to see how to trade these events, trade SPY and VIX together. That's what we do week in and week out. We don't even have to change our strategy. We just use the strategies that we have in place for the market cycle that we have, and on we go. So again, for the next 2 weeks, expect a lot of chop. A little up, a little down. I think VIX probably has set the low today for the next 2 weeks, if I'm not mistaken, waiting for the Fed to say something. And that's the market we have going forward, at least till the 17th. So today is the 5th. We've got what? Another 10 trading days for that. All right. Any questions before I go? Again, if you want to sign up, we got Weekly Profit Cycles is available. Hopefully I'll get a phone number for you. There should be a link in the show here somewhere, but I don't see it. Okay. Any questions? What could be a target sell price for VIX? I don't know what you mean, Rich. You mean when it gets to, it's in the bottom of the screen? Oh, call us 888-872-3301 if you want to sign up for Weekly Profit Cycles. The free daily trading notes is my F market. I believe it's Options Action, TR Focus. If you want to get on that list, call 888-872-3301. So as far as targeting VIX, I mean, I don't know. I don't know how high we can go. Rich? So you want a free trade out of me in our free session? I don't sell VIX until it starts going down. I don't sell it on the way up. That's my tip of the day for you. You want to trade VIX easier? Sell it on the way down, not on the way up. There you go. That's your free tip for the day. It's a lot easier. All right, so it looks like we got a little bit of a turnaround. The market is probably going to sit here unless everybody gets sad that the economy is slowing down. And then we might get our event today. But I know we're definitely going to get one on the 17th. For everybody in weekly profit cycles right now, you are prepared for whatever happens today. Either vol going down or SPY going down. Also, for people in special situations, remember, you already sold most of your puts for 25 cents. So anything you sell now for your VIX puts is gravy. So we'll see if we get a little bit lower volatility next week. It's possible. It's just not going to be a whole lot lower than today. All right, everybody, have a good day. I'm out. That happens in the market nearly every month, 96% of the time, and recognizing